Excuse me.
I'm muting, so I'll see you in 15 minutes.
No problem. I'm in. Okay.
Actually, don't say I'm in a trade because everybody in the room is gonna be like, "Why didn't I get that signal?" And this is not. This is like a.
What are you talking about?
Advanced entry. So just say.
Hey, Phil.
No, I get it. I just say.
Hey, Phil.
I don't know if you have to say.
I don't know why it's replaying that, Bob. I have no idea. It's like
That's like an old.
It's super
That's an
laggy.
old-
You know what?
old thing.
Let's kill this and restart the whole thing.
Yeah, that was a weird thing.
Let's
It's
just
like days ago.
stop and restart the whole thing.
Yeah, no worries. Oh my goodness. Cough, cough, cough. Did you turn to public, Phil? Because they only show one watching.
Yeah, it's public.
It's so weird. I can't get my chat to work.
Public, Phil, because they only show one watching. Yeah, it's public.
Uh-oh.
Did they blast it out?
I'm gonna go down and grab something to drink real quick. I got a little cough here going. Yeah, so we're gonna get started in about 5 minutes or so. Just letting enough people come in. And then we're gonna go to 4 o'clock. We got a hard stop. At least I do. And then my picture here. Excuse me. How are we looking here, Phil?
What do you mean?
Here we go.
Bob, can you hear me?
Yeah, I can.
So
I'm
we're
just
still
getting on
streaming.
chat. What's that?
We're still streaming.
Yeah, we're good. I saw that we're gonna get started here, right?
Yeah, if you want to start, go ahead.
Okay, let me. I just got on chat here. What's this top chat thing? Skip ad. Sorry, guys. I'm trying to get the chat here going. All right. Hey, so I want to do. I want to do first here. Is I want to show you guys kind of what we're doing here with ES during the day, and then I'll back off into a little talk macro here a little bit. But we we've been given a new tool in Nadex, and they're called the basically the Nadex Touch. And what it is basically acts like a futures contract. And I'm not going to give you a Nadex lesson today. I'm going to give you a futures lesson to show you guys how to trade this. And essentially, for every point in ES or there's three other touch indexes, and there's some forex ones as well, is that you pick up $10, and so it has bumpers built into it. So if you go below a certain level, you have ranges. It'll kick you out as a stop loss. If you max it out, it'll kick you off as a sell limit. So it's kind of like I call this trading futures with training wheels. But I like it because it just it's a really safe way to make consistent money, and the leverage is only 20% of the futures contract, and there's no way you can get wiped out because you get kicked off. So they're letting their algorithms with their money market makers, they're taking that risk of something happening outside of the bounds. But what we do is that Phil and I developed a really simple, straightforward way of trading this. And let me just start with the open here. The first thing that I look for when we trade is in let me zoom this down here so I can see better. Is I'm West Coast, so I'm up between 4 and 5 in the morning, and first thing I look for to see where price is against the volume weighted average price right here. And what typically happens is that you'll get a move in towards VWAP or a move down towards VWAP. This was the overnight high range, and this was the overnight low range. Okay, you see it changes to blue because that's a line you can move, and that also helps me develop the sense of where the market is going to try to attempt to touch one of these lines once it opens. So that's the first thing I look at. And then the second thing I look at is down here. Phil and I created this code quite some time ago for trading futures, and it's basically a buying and selling. It's a money flow. And I'm gonna look at chat while I'm talking here to make sure I'm doing this right here. Let's see here. All right, can you guys hear me okay? Somebody get on chat and tell me. And I don't know what positive volume index is, but I use money flow, and then we use stochastics. So so what we do here is like I said, we built a little proprietary code here, and then these Stokes here are just a combined. This is a 10-3, and this is the skinnier line, and this is the 44. I hid the main lines. These are just these are the smooths on this, because what's important to me is where they are in relation to each other. It informs me as to whether or not buying a dip or selling a rip is going to be what we're looking at, and is it in congruence or divergence with money flow. So this morning, the first trade I took is when it went down here and it touched the overnight low and came up, money flow was already coming up, and then the slow Stoke was coming off of 20. So I took this trade, and what I look for these things too is I'm looking for 3 to 4 points on ES is fine, because typically overnight you're not going to get a too big of a move. And then it my money flow peaked, and it was time for me to get out of the trade. So then I started looking for the first opportunities uh, to take the market short, and it presented itself pretty much right away when the slow stoke and the fast stoke were coming down off of 80. You took a short here, and then when it got up to here, when it was rolling back down underneath the overnight low here, is that it presented itself for another short that we took again, and it coincided with money flow failing, and it coincided with stochastics failing. So just really simple. You don't have to overthink these things. And it came down. I hopped off well in advance of this low. Like I said, I'm just looking to make sure that I'm trailing down. You can't put stops on with these. You can only do limit buys and limit sells. So you have to kind of do mental stops and jump out. And the market likes to reverse a lot. So if you get 3-4, this one I happen to get 6 points on. And so I goes 2.5, 2.5, 6. So it was just nice, easy trading. And then you get into the chop zone here. And this is where a lot of people get chopped up. And Phil will tell you during his time trading with we were trading binaries a lot last summer, is that Europe sets the tone. So around 7:15 or so, you start seeing it roll over. You know they're gonna keep pushing it down until Europe closes. And lo and behold, Europe closes at 9:15. I call Europe closed because it's extended hours to 9:30. But usually the nasty work is pretty much done by then. And then they pushed it all the way down to around 9 o'clock, and then you're in the lunchtime zone here. You just don't trade this. But I just want to just show you here is that you had the fast stoke coming up. Slow stoke wasn't following along. So you know this was going to fail. Okay, so you're looking for a double bottom. You got the double bottom here. All right. It popped again, but the slow stoke was still below and just kind of slowly grinding here. Wasn't worth a trade. But one thing that we did notice was it was coming back up to the overnight low, and either it was going to bust through or it was forming a wedge. And so we called the wedge. I shorted the wedge. And then again, I took another 3 points, 3.5 points off of it, and we were done. Now I finished trading, but then something happened here at around 2:15. I tell people in the room, when oil's down and market's down, as the oil market closes and it starts closing around 11:20 my time, is look for reversals in ES, because they use these markets together to hedge each other or to use them as collateral. And then if you notice here, the long stoke started coming, the slow stoke started coming up. Okay, and that should have informed you that the low was probably in, and it was made a double bottom here and then a higher low. And I know some people were trying to short into this close, but that's not how it works here when you're trading futures, is that these guys are closing their positions for the day. And so they already made their money here. And so these guys are closing out, and this is typical. So from 11:40 on, oil down, market down, look for a rise, and then look for an acceleration, but after 12:30 into the close. And that's exactly what happened. I know Phil was warning people in the room, don't short this market into the close. It's going to go back up to VWAP. This is kind of like home base. And so, and it did indeed do that. And now we're kind of in the no man's zone here until about 11 o'clock tonight. So for me, it was an easy way to pick up about $130 or so per contract, and without a whole lot of drama. And so, and this is a typical day. So it's going to commit one way or the other. And then Europe's going to close. It's going to drive into that close. And then we look then at VIX here. Okay. And the VIX tells me the story. And if VIX is up, then it's going to be hard for the markets to pop. But if VIX is down, then you can look for just the double top instead of trying to put in a double bottom. So I just wanted to kind of share that with you guys, but it works really well. It's a great way to make money during the day, because a lot of times I set my trades from the ETF list within the first hour, and the last hour is when you see my signals hit. Then the rest of the day I'm sitting in there chatting, so I might as well make some money while I'm waiting. And the nice thing about this is that if you're trading futures, anywhere, you have to keep big margin accounts. If something went horribly wrong, it doesn't matter if you have stops; it could blow right through your stops on a long position, and you could find yourself down, you know, 10, 20, $30,000. If a plane went into a building again, they would gap that thing down 100, 200, 300 points before you can blink, and they'll fill you down there, and then you'll get a note from them telling you gotta fund your account. Here with the Nadex thing, you don't have to worry about it at all. You got stopped out. The way we set it up is the most you can lose is probably $130 to $150 per contract. And then the downside is that you limit yourself. They have kind of a $400, $500 range. So let me look at the charts here. Yeah. So did that make sense? What what we're doing here with this? It's really good. You guys should, if you could trade during the day, it's just a nice way to pick up additional income. And we're figuring this thing out pretty well. We think we got the right tools to measure the market activity. And the only caution that we have here is that you need to look for best setups. That's why we kind of stay away from the lunch setups. Now, I'm going to go, when I stop sharing, I'm going to pop over and let Phil talk a little bit, and then we'll show you, maybe Phil can show you SPX and show you what we're doing with the moneymaker there. So anybody have any questions for me? And then Phil, I can flip it back over to you. I think Phil has me on mute.
No, I got you, Bob.
I just shadows here. So I just went ahead and kind of walk through what we're doing for the day. I don't know if you want to, I'm going to stop sharing. You want to maybe show them what we do with SPX too on the moneymaker?
Okay, let me hang tight. Hang on.
Do you need a minute? Do you want me to?
Yeah.
Talk a little?
Do you have that SPX loaded?
I do, but I don't want to show people my emails. That's what's on the other screen right now. So let me stop sharing for a second, and then give me a second. Let me pull it up.
Okay.
Okay. I'm gonna start sharing again here. The contracts are Jason. You pick you pick a range, and then the contract costs as much as your loss could possibly be. So it doesn't cost you anything. It's just that they'll make sure that you have enough in your account to take the trade to the max loss of the. You get 4 levels to trade from, and so we take the one with either the smallest or the second smallest amount of max loss in the trade. But typically, the trade is going to cost you between $6 and $10 to in spread. And so and they've been tightening up. We've been getting good fills lately, so more and more people are finding this now. So let me go to my. There you go. Can you guys let me know when you see this here? I'm gonna get my mug off of there. There you go.
That looks good, Bob.
Yeah, thanks, Darren. I know I look good. I shaved the beard, and I went to the coffee shop, and they asked me where my dad was. This is pretty funny. So this is our moneymaker. So here we go. Let me slide this over. Let me slide. Here it is. Okay. So let me move me down here a little bit. So what we do here is that I look at both these all day. So, and Phil looks at this pretty much exclusively, I think, is that we have.
Yeah, I just look at SPX to time those entries.
So what I've done here is mine's a little bit different than Phil because I have a little bit more information on here. Is that these lines here are this is the center line of linear regression. This is first, second level, third level, and I reason why I did thirds because I'm trading crypto sometimes when it pushes down is when I'll take trades even ahead of the moneymaker. And so what we're always looking for is that, and Phil and I talk about, we can't, it's so weird. It's the math on writing a linear regression model is beyond their ability to let us program it. So we can't create a mechanical signal on our moneymaker at the opportune place for the linear regression line. So we added a couple tools to this. First of all, we like taking the trades. Now, unfortunately, this is dynamic. So what may look like in trades weren't in trades, but I'll just assume today this was how it looked over time is that we don't like to take trades when the arrow hits and we're inside of minus 1D and higher. The risk reward we've determined over time is just not there, and see that played itself out. But when it gets down to 2 standard deviations and you get a moneymaker hit, this is just a Stoch RSI, and this is that same 44 that we have over in Thinkorswim. And so when this thing gets to -2, or at least past -1 when it fires, you're going to get a tradable bounce to be able to take the touch or to take the futures. And then here again, we're getting a higher low on Stoch RSI. We're in range here. Boom, this is a tradable. And this is why I talk about if you get 2, 3, 4 points, take it, because the market might be trending, but it'll pull back a lot. And just take your money and wait for the next trade. And then again, it went down to here, you take the buy again. So on the sell, it works in reverse. So, you're looking at like up in here, you just have to trust me because we're passing it. We don't wait for the sell signal on the way down. The sell signal, the way we constructed our moneymaker, is the sell signal is a little bit more delayed. We wanted the buy signal to be extremely responsive. And the way the code was working is that this was the best trade-off we can get. So what we look for here is that we look for the Stoch RSI to start rolling over, and if it hits 80, this happened to be perfect timing, but a lot of times this will roll over before this will show, and then you can take that sell. Personally, I like to go long more than going short unless it sets itself up really nicely, because people in trading will rather push the market higher than lower. You have more forces against you shorting it, and it's always looking for a reversal. The other thing too, it's always easier to see buy signals versus sell signals. A lot of times these sells will roll over, but these buy signals tend to be sharper. So this was the sell signal that I was talking about, earlier on the other chart. Boom, that opened up, came right down. There was a sell signal. So that's what Phil always talks about the moneymaker. He would have took this one. He would have took this one. He would have took this one. He wouldn't have took this one. But the caveat was we were already in the trade after oil, and so that's what made this trade. That's what made this trade here possible. And you would have just went ahead and took that trade and took it into the close because of other factors. Okay, but normally if this trade was here, was at 9 in the morning, we would ignore this moneymaker. Okay, it just works out so well, so easy. You just wait for the trades. No sense forcing the trades, and it's always good to know like where you are in terms of high, low, and the overnight high and overnight low. But SPX is just this SPX is just regular trading hours, and if you're trading futures, you'd have took this trade and this trade, you could have been done for a day and left. You'd have made $400 or $500 and you're gone. So anyway, so that's that. And
okay, I will show how I do that, or what I look at. It's similar.
Yeah. Go ahead. You want me to stop sharing?
Not yet.
Okay. I want to show you this. This is the 4 hour chart which we based all our signals on, and this is what I'm waiting for to break down to know that we're going to go back into a bear market move here. It needs to break this right here, this 2674 area. Um, now we get this gap down. This may fill first, okay, but once it breaks this, then I know we're going to be coming down pretty hard. So I went ahead and bought SH anyway because when you have a gap like this, there's just some sort of change here. But to be confident in your bear move is right here, and so it works the same way, except that when you're at a 4 hour chart, you take the sell signal above the center line is cool. You just don't take the sell line below the center line. And then look at this buy signal. Buda took this buy signal in December when the world was ending. Remember when the world was ending on the 24th of December? Buda took this buy signal and just held on. This is a high $15,000 trade with one contract with ES, and we didn't get a sell signal until today. So this is a pretty good tool, and it's really, the hard part of trading is trusting yourself with the signals, but the signals don't care. It's looking at certain things, and it just if you trust it, you make money. If you don't trust it, you don't make money. So anyway, I'm gonna stop now here, and I'll jump over to something else here. Just want to make sure if we're good here.
So Bob, I'll show real quick my SPX.
Yeah. Do I need to stop, or can you stop me? Let me stop sharing.
Hang on.
There you go. Okay.
Okay. So, what I do on this trade, similar to what Bob's does, basically what I'm looking for is the money maker to coincide with when our stochastics are oversold. If that's not the case, I don't take the trade. Okay. I also not a huge fan of when we're in a pretty decent downtrend. Oops. And it fires. I'd rather ignore the first one. So in other words, when this guy here fired, I didn't take that one because when you're in a solid 3 minute downtrend like that, I kind of like to let that one burn. The second or the third one is better. I actually really like the third ones the best after a downtrend. If we're just gyrating up and down, then I'll just take the next one that happens. But key is that the stochastic is oversold, and then we get our proprietary moneymaker buy and confirm. Yeah.
Phil, they can only see me.
Oh shoot.
So what Phil is trying to say is
I didn't transition us over. There we go. Sorry, guys. Okay, so basically what it is what we're looking at is when the moneymakers fire, I like to look at where our stochastics are, and also like to look at what the previous price action was. So when we came down today and that moneymaker fired here, I didn't take it even though the stochastic was oversold. And the reason being is that I don't like the first ones after a steady drop like that. These are 3 minute candles, and look how many they were before we finally let it pop, because tendency is you'll have a little bit of a bounce and then it rolls back over. So I like to look at the second and third ones, which were both nice little swing trades. In fact, the third one moved the best. I didn't get on that third one because I was distracted, and then by the time I saw it, it had moved. So anyway, that's life trading, but that's the stuff I like to look at. Also, too, I like to look at where we are in relation to things. Do we have pivots in play? Where's VWAP, deviation levels? And so we track all that in the room. Also, gaps, I like to see where we are in gaps. You can kind of tell when they're going to go gun for the gap close. So that's why I like to have the SPX chart up, because the signal is the same, gets you into the same entries on the futures. Because the futures and the SPX are basically doing the same thing, just a couple points difference usually. So anyway, so that's basically it. But when you're in the room, we can kind of hold hands and talk about when we want to take those entries and when we don't. But after that dip was done, that worked, that worked, that worked, and even that worked. So even though they weren't my ideal entries, but when you get a nice uptrend going, the stochastic won't be oversold, but will hook up and you'll coincide with these money makers. So it's a powerful signal. And then currently that's been, and Bob will attest to that, it's been really helping out his entries on those touch brackets. And I think those touch brackets are really good too because they can get you kind of in the mode of trading futures, like Bob was saying, without the high leverage of futures or binary options, even for that matter. So anyway, just wanted to kind of put my spin on that.
Yeah, and I don't know if what else you guys want to talk about, but the market right now is that we're gonna have to wait and see if today was just a typical Thursday before OPEX dip, and we're gonna punch this thing back up through to OPEX next week, or if we're going to roll over here. And so of my trade signals, I had absolute zero buy signals today. The only trade I really had in of significance got blown right out, and other than bonds and the short ETFs, everything was on a sell, and so that's pretty crazy. And even with the metals and miners, they were starting to show some weakness today too. So my view is that they may be trying to do this might be a strong dollar deflationary kind of sell off, and so I think we were smart to take profits in the metals and miners. And this is a time to be careful. I'm messing around with some puts, have SH on, but other than that, I think I have 2 lottos left, and everything else has been either profited out or stopped out. And it's time for some caution because China comes back next week. This trade stuff is not going anywhere. It never was going to go anywhere. China can't give in to us because they're screwed. And if Trump keeps doing what he's doing, they're screwed. So, and last time this happened is we had a quick 20% sell off at the end of 2015. And so we have to be careful here, so if you have portfolios, you need to probably talk to your financial advisor and try to understand where they're thinking about. But being complacent here is probably not really smart. We've been given 3 opportunities to get our portfolios defensive, and because we're gonna retest the lows. It just the way it works, and they usually overshoot it. A 1.6, the 116 fib, it's going to bring it down to 1800, 1900 on S&P, and I think that's probably what will hold it before the Fed's in full flaming panic mode, and this can come in the next 4 to 6 months. So, so the trade signals are going to be very careful with until we get a sense here, and then I would love to see an absolute divergence between gold and silver and the markets. In fact, silver was up today, so I just don't know if it's going to help the miners short term, but at some point people will rush into the miners to as a safe haven, bonds, metals, and miners, and then when the Fed starts to actually reduce interest rates, then you'll see the metals and miners absolutely skyrocket, and that's the play we're looking for in 2019. So I'm trying to read chat here. Is anything new on chat, Phil? That because I can't see and talk at the same time.
I can't see it at the moment. I'm blocked by stuff on my screen that I need to look at.
Oh, no, that's too funny. Let me see here. He keeps taking me out of chat too. Sorry, guys. Just trying to do things in the mobile at the same time. I know what I can do. I can see it from the video itself. But but yeah, so that's kind of what we're thinking, and on the crypto side, we weren't really going to talk about that too much today, unless somebody has a specific question. I'm going to try to get to those in a second. But right now, your best opportunity to make money is going to be, if you're trading, is to actually to be trading. So, um, and probably put some SH on, or put some puts on, or even RWM or SQQQ. The employment reports haven't been. I mean, the earnings reports haven't been that great. So let's see here. We have a pretty light crowd today too, Phil. Let's see. Okay. Oh, I can't see anything from my side because you did it on your side.
Are you wanting to show something, Bob?
No, I wanted to see. I wanted to see the chat. Oh, here you go. It popped up. Yeah, let me see here. Yeah, so let me read some chat questions here. Thanks, Darren. If you say the same philosophy for cryptos, we use the same algorithms to trade cryptos, because cryptos trade really pure from a technical analysis standpoint. It's still all about buying pressure and selling pressure. So we absolutely do that. And then we have UNG. Look, UNG got officially stopped out, but I think it was probably an over push here, an overthrow down, and I'm going to sell calls against my position on it. I kept it. I believe that natural gas is going to skyrocket here in the next 60 days, and so I'll bring my cost basis down on it. It is absolutely at lows right now, and I think they're having a tug of war between the buyers and sellers here to see who loses their test their wills first, and so I'm going to hang with it. Yeah, and marijuana stocks, who knows why those were up today. It was absolutely befuddling to me, but I never thought of marijuana stocks trading at PEs of hundreds to one are considered defensive, but hey, no idea. I trade only in miners because I like the leverage. Silver doesn't move enough for me to make it interesting to me. And I'll trade silver futures because it's really expensive, and I don't like what they do in the futures market. So I hold silver and I trade silver miners. So yeah, Darren, that's right. MJ is the way to high. Maybe these guys were so stoned they didn't know the market was closed, was going down today. So yeah, we actually used a moneymaker. I did when I first started doing the touch. Phil will tell you, I traded the yen pair using the moneymaker on a 3 minute, and the moneymaker works just fine. It's just that it didn't work well with Nadex touch because there wasn't enough movement, and then the Nadex contracts, all the reversals in it, you have to be pretty quick on those, but moneymaker works just great on it. So let's see what else is on here. Phil, they want to know what do you think of, will Bitcoin break 3,000 or?
Here's the thought on Bitcoin, and if I can get a chart up, I will. But basically, with Bitcoin, the things that are the macro things that are in play are the halving event, and when we start getting out, that's going to happen May 2020. That's the current schedule. So May of this year is 365 days out. So for me, on average, if you're getting into Bitcoin about 400 days out, so that's going to take us to right about this area that we're in now. That's historically been where you've seen some of your greatest returns on Bitcoin on a macro picture. So this is A, after a blow off top, and then B, getting in that this window that we're entering before the halving event. So that's where we're at now. We've had our blow off top, and now we're cycling. So that's going to bode really well. And you've gotten a better picture of Bitcoin as far as what's going on with the circulating supply. You know, they think about 4 million are lost. I actually think it's probably higher than that, but we won't know as time progresses and wallets get older, where that's probably going to be more probable. So you've got 4 million out of the circulating supply gone, right? So that's 4 million out of 21 million. So you're down to 17 million. The inflation rate in 2020 is going to get cut down again. So that'll take it below gold's inflation rate. And you also have a mathematically finite asset that's being globally accepted. The globe hasn't largely understand it or embraced it yet, but globally accepted by the earlier adopters. So, and the financial houses are behind it, you know, and those guys have all of the smart guys in the room. They hire all the best PhDs, mathematicians. So they've kicked this thing around a lot. And they, you know, if you're going to get a futures market created, which doesn't happen every day, I mean, it just doesn't, off of something like Bitcoin, and you're going to dismiss Bitcoin, you're not really seeing the big picture of what's going on here. So yeah, it's at 3,000. Could it go to 2,500 or lower? Possible. I don't think it's gonna, because at that point, what you guys have to realize is that's chump change for some of these larger institutional investors. I mean, that's nothing. Where you have an asset like this that's so finite, that's probably going to be worth what the Berkshire shares are worth. So I think in time you're going to see really, really high valuations. The thing that happens with Bitcoin when it gets into these situations is that it lulls everyone to sleep. And when it lulls everyone to sleep, that's usually when the bottoms get put in, you know, give or take, you know, a few $100s, right? But that's when the bottoms are put in, and the bottom isn't realized until you look back and you see that it's been put in. So a lot of times it's just better to start laddering in, especially for long term. You know, you could do that every week. You could say, I have $5,000 I want to put to work in Bitcoin. You could literally just chop that up, right, into intervals. But I think, you know, this area here, even if we do lose the lows at 3,100, I don't think we're going to spend a long time under that. I do think Bitcoin is going to get boring for a while. We're not going to see the volatility. And then we'll start seeing a steady rise again. And then we'll start getting back into a more a steeper retracement of the pullback that we've seen from 20K. So I'm still bullish. Nothing's really changed. In fact, I'm even more bullish. What happens with these cycles too is they ignore the fundamentals, right? If you're in a bear cycle, it's just going to be bear. If you're in a bull cycle, it's going to be bull. And you'll have momentary things like you'll have like something. If you're in a bull market, you might have something bearish comes out. Somebody says something bearish, and you might exasperate a pullback in a bull market. But largely, bull markets and bear markets will end when they feel like ending, not based on any news. So in 2018, you saw like the most fundamentally bullish year for Bitcoin ever, like bar none. And that was just due to all of the adoption, all of the tech, the layer 2 stuff, you know, the institutional stuff that's going on, payment processors, blah, blah, blah. Bullish, most bullish year, period. That's going to play out and play into the next cycle. Okay. So, and that's really a lot of how this has really happened since these cycles have really started since 2011. So, you know, don't think it's over. This is just another cycle, but what you have to look at are the bigger macro charts, right? That show that the price levels have steadily increased after every cycle by quite a bit. But this is the window that we're getting into to see that big bounce. So that's where we're at on that.
Yeah, I think that's pretty much your questions here. I know somebody asked about showing the moneymaker again. Just go back and review the video. Go in at about 15-20 minutes in. We spent about a half hour showing how it works, and you'll get a good sense from there. We just won't have enough time to circle back here. And then I don't know if when somebody's asking about tax tips, I don't know if you're just being funny, but we don't have any tax tips here. So, you know, we just follow whatever the guidelines are for short-term, long-term, or futures. And that's pretty much it. trade in an IRA if you can, you know. So, but and you know, Rob, if you need to, we could probably do a Saturday session. It's just need a couple days to line up. So if you're thinking about something for the weekend, uh, just let us know. And yeah, yeah. Usually for us for coaching, I know for me personally, because I'm actively running the business at the same time we're trading and I'm in the chat room. My windows are pretty tight, like between you know 2 and 4 that I can do coaching. I'll do a Saturday morning session if I need to, and then Phil has different windows because he's more active doing forex from late morning to late evening. So he'll do some more morning coaching sessions if it's crypto or binary related. So just kind of let us know what you want. If we can slip you in to our slots, we will. And then, any of you guys have any other questions? I mean, we're trying to get back into doing these things every 2 weeks if we can. But just to recap, from a stock standpoint, I think it's time to be defensive and kind of wait to see where this market plays out. I'll be posting more day trade kind of things or defensive trades, but I think everything's going to swoosh down. We're spending a lot of time trying to understand this Nadex touch because I think it can really help people who like to day trade make a really decent income and with not a whole lot of drama. And then Phil talked to cryptos and just check our videos out. And we're having a really good run here. So we're running at about 50% higher on average than our normal win rates, and in terms of percentage wins than normal, because we're getting into things now that are meaningful: gold, silver, miners, even the cryptos trades that, even though the market's been kind of dull, we've been doing pretty well with them. So, and then we haven't even talked about the Nadex stuff. This, the return on investment with Nadex, if you do it right, you can do pretty well. Phil, David, he was talking about when you trade forex, what like kind of time frame do you do?
Most of our time frames based on our high performance system is hourly. We focus on the hourly, and it's is that?
I'm sorry. Yeah, that was the question. Sorry about that.
Yeah. So basically, what we look at as far as when we're going to do our entries is all on the hourly, how the hourly bars are, and then if I'm in a trade and I need to get more granular, then I'll get down into a smaller time frame. But as far as the entries go, it's all based on levels and hourly bars as far as how we get into the trades.
Yeah, KW, are you sending emails in and not getting an answer, or are you just not getting the answer that you need on coaching? info@tradegenius.co, and Matt picks up all those, and then he pings me and looks for availability for myself. He does the same for Phil, and then we'll hook you up, because I'll just tell him my next available time, and then he just schedules me. He doesn't ask me when I tell him my availability is. And then so just send that in, info@tradegenius.co. Say that we talked on the webinar, you're looking to get your coaching scheduled, and then we'll hook you up. And then that he'll answer that. I don't know why that's not coming through, but just put on their need coaching time on the subject line, and we'll see it. Or our Phil and I's third partner, who kind of manages the business behind the scenes, he'll make sure it gets addressed. And the other thing on UEC, we stopped out with profit, but I think it's a really good stock, good lotto. I think it's going to fly. So if you have no immediate needs for the cash, I'd hold it. I still think it's going to get up into the 160, 170 area, and because I think it's going to get bought out. Uranium is going to be in deficit, and all the junior uranium miners are going to be in play, and so that's going to be the next big play once oil starts to settle down here a little bit. And let's see here. Anything else? You guys have any final questions? I know Phil has to work, and I'm gonna go grab a drink somewhere and relax a little bit. So I'm gonna cut off about 4 o'clock. Oh, I don't know, 401ks. Yeah, I mean, look, it's probably time to be safe, and there's a good rule of thumb that Phil and I, there's a guy named, Mark Yusko. He's a financial advisor. He says, hey, once the um, stocks trading over the, I think is it 200 moving average is 55% or less, he said you should be in cash anyway. So those are the kind of things you need to look at. And we had a really big run. And so if you're in, you'd probably want to get back out again. And me personally, our 401ks are in cash because I can't trade them. So I just went ahead and went defensive on it. To me, if I miss a 5% up move versus missing a 25% down move, I'd rather miss the 25% down move and then start adding back after that. And so that's kind of my personal view on that. So, okay, LOS, I see you too. Do you have a question or just give me the eyeballs? You know, day trading full time with us, we can't make forward predictions. It's really up to you. We gave trades out today and some people lost money. So, so it's really up to, your abilities and your discipline and your paying attention. But, it's our signals work. And so they have a profit factor of 2/1. And so you can do okay. So, but it's hard for me to say that. And we're not financial advisors. We're not security guys, and so I just can't make declarative statements. There's people on the chat here that trade with us, and they'll tell you whether or not we make them money or not, helping them make money, with the signals. So, but I don't know how much money you need to make. I don't know how long you can trade for. I don't know what your risk tolerance is. So it's hard for me to say. But Phil made 250% on the trades on crypto. The ETF trades are annualizing at 150%. The day trades are pretty good depending on what you want to do. Moneymaker works with Forex. Greg, this webinar will be public after we shut it down and after it renders. Hey, Gloria, how are you? Jim, I didn't freeze. That's my look. There's some funny guys on here now, Phil. Okay. Let's see here. I think that's pretty much it. You guys have any final questions? And if not, we'll wrap it up. Oh, and then 2 week, Phil, 2 weeks. Want to just schedule it now? Oh, let's see, 2 weeks, the 21st. Yeah, I can do it at 3 o'clock. Bcash, we just use the linear regression that's sitting on the trading view. And then I use 1, 2, and 3. Phil just uses 1 and 2. Our look back's 100. Okay.
Yeah, 2 weeks from now is fine. We'll have more charts and stuff up.
Yeah. So.
All right. Well, I think that does it then.
All right, great. Hey, thanks everybody, and
thanks, guys.
Make sure you tip your bartender on the way out.
See you guys later.